Welcome, and you are just joining us on Business Nigeria. My name is Tunji Andrews, and we are here outside the studio we're at the Debt Capital Market workshop which has been put together by the FMDQ OTC, and basically we're going to be having some interviews. We're going to be having an interview with the MD of Lotus Capital, also the MD of FMDQ OTC, and then we're going to be speaking with the MD of ARM-HARITH Investment Fund Managers, and we're going to be getting a feel of what the event is about and basically the capital market on the holistic trend. So stay with us. I would be speaking with big man himself. Many people call him KOKO. He's BOLA ONADELE, the MD of FMDQ OTC. Welcome to the show, sir.
Thank you very much.
So basically, the first thought on my mind is, we've spoken a lot about the capital market in the last 2 days. And if you look at the capital market in Nigeria, it's still, I think, roughly about $27–30 billion compared to South Africa, which is, Nigeria is just about 20% of that. And on the reverse, Nigeria's GDP is way larger, $511 billion. What can we do to catch up?
We will catch up, for starters, and we've started what we're going to do, and this is bringing all the stakeholders together and to align all of them behind the vision. And that's what we're doing with this. We've set the vision, but if you do it in isolation, we won't get there. This is the first time you see the quality of this sort of workshop organized by Nigerians themselves, and that tells you that all of us are beginning to queue behind the president, Muhammadu Buhari, in terms of we have an opportunity, and this is the time to take it. You saw the regulators there; all of them were present.
We're present, yeah.
Debt Management Office.
I was pretty much surprised about that.
Securities and Exchange Commission supported this right from planning stage last year up to now. You saw the National Pension Commission here.
True.
And then the agency that, if it does not key into the vision, it may not happen, the Central Bank of Nigeria. We may have had challenges in foreign exchange and what we're dealing with now. By the time that settles down, people will see the vision of this current leadership of Central Bank in terms of what to do. It starts from that interest rate. Once this country starts getting that interest rate
right.
down, right. And the discussions here today, equalization of taxes. We have to stop all these federal government tax exempt, the others are not tax
exactly.
exempt. You don't run a market that way. We have to stop distorting the capital market benchmarks. The states cannot borrow lower than the federal government. If federal government wants to give states some rebate, let them first borrow, tap the market, and pass the rebate. If we have power bonds coming out, let capital market handle it. Central bank can add this guarantee or pass the rebate. Look, the issue is the Nigerian economy, as I said, is huge, but our financial markets, we have not allowed our financial markets
to expand.
When Central Bank wants to intervene in a particular sector, call FMDQ, OTC, Securities and Exchange, and say, look, the capital market needs to move this direction. We don't think 14% that they will get in the market will work. We would like to support with 5%. Don't fund it. Let the market fund it. I promise you in 5 years, if an NPC is importing and has bills to pay, don't issue a paper that nobody knows where the paper
exactly.
is. Look, the NNPC was issuing sovereign debt notes. Sovereign debt notes, it must be paid on maturity date. What is the size? Nobody knows. The government should tell an NPC, you're an agency, go to the market,
raise the money on.
Look, we've studied South Africa and most of these places, China, Malaysia, we have. The state-owned enterprises, SOEs as they call them, are the largest in the corporate bond market. Infrastructure will contribute, utilities will contribute. MTN and all these telcos, Glo, it's time for them to come to the capital market. Nigerians have not seen anything yet, but we and the regulators must streamline processes. There's a reason why we're overloading the banking sector. And it's because the banking sector will give you speed, which wasn't there when I was a kid. But competition has brought that speed.
Exactly.
With every agency will require benchmarks that they have to deliver in terms of performance, in how they support the market. And there has to be an alignment. The board of FMDQ annually will be, the chairman will be hosting all the director generals of PENCOM, Securities and Exchange Commission, NICOM, NDIC, you know, and having them sit at the table with the board and saying, what do we need to move this market forward? What we never heard, sir, was alignment of vision, and everyone was just operating in silence. That has ended. You saw this session here. Nobody identified himself as either a stockbroker. You saw the members of the Nigerian Stock Exchange. You saw the CEO of the NASDOTC. Outside, they see a market, and that's the Nigerian market. All these platforms, we need also to work together.
I want to ask, particularly on, I mean, one of the things you generally want in such a drive is the political will to push it forward. I remember seeing David Cameron speaking about non-interest financing Islamic banking, and he was talking about the fact that he wanted to make the UK the capital of that region. And I mean, there's no more encouragement you can give to that market than that. Would we see such in this part of the world where we have political drivers of the capital market?
Yes, is the answer. I'm highly optimistic, and you'll have seen I'm a Nigerian, you know, I'm highly patriotic. And I think, again, it's about vision. When you have visionary leader, the leader says, I want Nigerian capital market to be the hub in Africa. When he says that, then we all work and do it and drive
Make
towards
sure it happens.
Exactly. So all of us are queuing now behind Oscar Oyema, who is the CEO of Nigerian Stock Exchange, and we are the exchanges coming up. And we're saying, take the leadership. Also, highly respected Boje Agimokwede is the co-chair of the Emerging Capital Market Task Force for Nigeria with Sir Roger Guilford. And those Oscar have the responsibility to lead this in this country at the moment. And all of us are ready for that leadership, and we need to make it visionary. And one of the things they're looking into is having a single platform as a voice for the capital market. All the associations, of course, will be members, banks, everybody. But when we speak to any government of the day, be it one party to the left party or the right party, what we want for Nigeria is that global competitiveness. The point is we need to start running Nigeria as an entity, a business entity, competing with other countries. We need to see that. And that's what you see in the UK. And where you have in the UK has seen itself as international capital market, and it wants to retain that status. What is our status in capital market? We need to define it so all of us can run with that agenda. So I'm sure the IGLEC team will be meeting with the vice president, so there's synergy. Synergy between government and private sector on what we want to do. And if indeed government says that's the vision, we want Nigeria to be the hub of capital market, it's not going to take long for all of us to keen behind this. And the building blocks are there in this country. If you check the CBN Act, there's this Financial Services Regulation Coordinating Committee, FSRCC, it's there. Are they meeting? They need to meet. We all need to see the deliberations. What are they doing? You saw my presentation as we're closing. There's a STICOM where the DGSEC will be, and we take initiatives, and he has to clear them. And once the DGSEC does, and is highly passionate, is driving the capital market master plan, then all of us have to key in, and we have to report on this. People need to be held responsible, accountable for whatever responsibility they've been given. This is what I've been given, and we're pursuing in FMDQ the debt capital market, and we'll see it through.
Thank you very much for being with us on the show. We really appreciate your time.
Thank you very much.
So thank you. We will be rounding up shortly. Do not go anywhere. This is Business Nigeria. right now I have with me Mrs. HAJARA ADEOLA. She's the MD of LOTUS Capital, and we're going to be talking about non-interest financing, or what is also known as Islamic banking, and we're going to be going into that. Welcome to the show. Basically, the thing I've noticed about it is, because I kind of looked at it from the global perspective, and we're looking at a market which has about $2 trillion going around, and Africa now, not even Nigeria, has about just 3% of that. I mean, what can we do? I mean, we need to get in on this, this investment. What can we do to get in on the action?
I think we need to decide that it's something we want to do, and we just need to do it. I always use the example of the UK. We had in September 2013, the UK Prime Minister David Cameron just came out and said the UK is going to be an Islamic finance hub. We're going to issue a sovereign sukuk, Islamic bond, and by June of the following year, they had issued a £200 million sukuk, which was 11 times oversubscribed. We've been dabbling in this market now since about 2004. 2005, the regulators have come up to speed in terms of frameworks and guidelines to protect the market. There are non-interest banks, there are insurance companies, there are asset managers in the non-interest space. So we really just need the political will to get on and join it. South Africa was the first in Africa to issue a bond. Senegal has. Cote d'Ivoire is about to. It's a shame Nigeria didn't lead the charge, but it's not too late for us to join it.
We need to get in there.
We need to get in there. It's a fantastic way of sourcing capital from unusual sources and places that we haven't accessed capital in the past, and it's a fantastic way to develop the nation.
So could you quickly explain to us the basic difference between a sukuk and regular bond?
One of the precepts, there are several precepts of Islamic finance. One is that the activities underlying the asset must be socially responsible. The other is that money is not has no value. So you have to employ, you can't just earn an interest for having money. You have to employ that money in some economic activity that then entitles you to a return on the money. It also has to be project or assets based. So there has to be an underlying transaction or project or asset behind that transaction. So if you buy a certificate in a sukuk, you are actually buying a share of that transaction or project or asset, as opposed to a bond, which is just a debt obligation.
Rents on money.
It's a debt obligation.
Yeah.
Yes, I'm giving you my money, you owe me the principal back with an interest rate after some time. With the sukuk, I'll give you my money, I own a share of that transaction, and I'm going to get a return based on my share of that transaction.
So the thing I've heard with a few people who are looking at that space, you hear the thought of there are not as many options out there as they would like, and there are not too many instruments. I mean, those are challenges. What are we doing to make it more, make it a bit more, maybe create a variety of them, so that people who feel, okay, I'm comfortable with this, I'm not comfortable with that.
Yes.
The rates here might be good.
Yes.
What are we doing to do that?
I think it's it's an industry in its infancy, and so some of those are just a factor of time. There are only 3 banks that have any form of non-interest capacity, 1 full-fledged and 2 windows, compared to 24 commercial banks, some of which have been around for over 100 years.
True.
So they're playing catch-up. But I think it's important to note that this is a very critical alternative, even from the depositor or investor's point of view. There are some people that don't access the financial sector because they don't want to access it at an interest rate. They want to access it in a way that is in line with their values. The other thing to mention as well is that it allows for financial inclusion, which is critical.
True.
So as an alternative, beside the conventional market, it can only widen the market for everybody and bring people in that were hitherto not involved in the financial market. And that's good for everybody.
True, true.
And then the funds that are raised hopefully will be applied towards projects that are going to have socioeconomic benefits, again, to
the entire...
and allows you to access money from perhaps the Gulf. That's why the UK and other Hong Kong, Luxembourg are issuing sukuk. Why are they doing that? To attract capital into their economies, to develop their home economies.
So we're looking at Nigeria right now. Crude oil prices are falling. The JP Morgan issue happened recently. There is a window now. 5 years from now, do you think we would have been able to take advantage of non-interest banking in Nigeria?
I would hope so, and our expectation is that we would have, based on the timeline of the framework by the Debt Management Office. It's certainly within the project pipeline for the Debt Management Office, but like I said, everything requires the will
to do it.
There's nothing else, there's no other impediment. That's what I can say. There's no impediment to doing it. If Nigeria wished to issue a sovereign sukuk within 12 months, we could have a sovereign sukuk.
Do it.
Yes.
Thank you very much for being with us. We really do appreciate it. Yes, that is HAJARA ADEOLA. She's been speaking with us about non-interest financing. You might want to go get some of that yourself. We're still here on Business Nigeria. Do not go anywhere. We'll be right back shortly. And yes, we're still at the Debt Capital Market workshop which was put together by the FMDQ OTC, and I'm here with Mr. OPUIYO. He's the MD CEO of ARM-HARITH Investment Fund Managers, and we're going to be talking about stuff around infrastructure and as it concerns Nigeria. Now, the thoughts on my mind are basically, I was listening to the discussion, the panel you just had, and someone said something about we needed about 2.8 trillion naira every year to try and meet the housing deficit we have in Nigeria. You would think that someone would call an emergency, the president would stop everybody and say, okay, we need to fix this. But everything seems to be going as normal. Why do you think that is? And if we're going to fix it, what do you think we should start to do?
Okay, just to talk about the figure very quickly, a figure that I've heard more recently is by the Nigerian Integrated Infrastructure Master Plan, which forecasts a need of about 3 trillion naira, but over 30 years, not every year. I mean, that's 2.8,
okay.
Yeah, but whichever the figure is there a sense of urgency about it? Well, I think there is. I mean, at the moment, you see a lot of initiatives going on in the power sector. From the previous administration to now, we've had the privatization of the power sector. We are seeing a lot of independent power projects, queuing up to come to market. There's more talk about transport infrastructure, projects like Second Niger Bridge, works going on Lagos-Ibadan Expressway, and various other things like that. And I think you're going to see more and more of such coming to the market eventually. But why doesn't there appear to be a total deluge in the market? It's usually because it takes money, it takes skill, it takes preparation, and it does take time to ensure that these projects are properly structured for people to be able to invest in them. It also, for example, requires the right legal and regulatory framework to be in place. And in some cases, even in the power privatization, we've seen that some things need a bit of adjustment as you go along. So I think what we're seeing is the natural startup phase of what is essentially still an infant market as an infrastructure in Nigeria. But is there an appetite to invest? Yes, you're seeing a lot of private investors, both local and international, taking an interest. I think situationally at this specific point in time, there's a bit of a wait and see approach because we're all waiting to see the new government fully settle in, a new cabinet, clear policies, and that way the confidence then comes back for people to start taking very serious long-term positions in infrastructure. Infrastructure is a long-term play. It isn't a fly-by-night thing. So before you do it, you have to be clear where you're going. The other thing about infrastructure is it's actually quite expensive. So again, before you take risk and you put a lot of money down, you need to know what you're doing. Those are the kind of things I think that are right now defining the space we're operating in today.
I mean, the group that holds the largest chunk of funds around the Nigerian space would be the PFAs. They're sitting on quite a significant amount of cash.
Sure.
And a lot of people have been speaking about the fact that we could use this to develop infrastructure,
sure.
We could use this to push that. And a lot of that is not happening. Why do you think that is? And some people have also said it's because of we've not had enough products, enough instruments to be able to give confidence to do that. Do you think that is the case? And if it is, should we be bringing more of that money into to fund infrastructure?
Well, I certainly believe that the pension fund money is very, very well suited to infrastructure investing. Pension fund money has a very long-term investment horizon in just the same way that infrastructure does have as well. But I know that there's certain structural issues about the pension industry. Take, for example, daily valuations, which make it very difficult for them to take long-term risk on infrastructure projects. But then again, I think also the Nigerian pension funds are genuinely learning about infrastructure. There's still a gap in knowledge and skills and experience. And you mustn't forget as well, they have a very strong sense of responsibility in terms of protecting the assets that they have. Because at the end of the day, the pension savings that are saved today must at some point be paid out in benefits to the retirees when the time comes. So I know they take very seriously their obligation to ensure they can meet their liabilities in the future. But that being said, if, for example, the new Nigerian pension fund investment guidelines are implemented, we're waiting for that to happen, then, for example, you can structure your portfolio into what we call multi-funds. And therefore, you can place maybe what I call the younger entrants into your pension funds against longer-term funds. And you don't have to worry about the same daily valuation problems that you have with retirees about to go to retirement, already retired. So it really requires a change, a reform in some of those issues. But I think significantly as well, there's a general confidence issue or a lack of confidence issue, because the history of Nigerian infrastructure has not been the most fantastic. Sure. But I think that being said, the history isn't always an indication of the present and or the future. And what I see is a change in attitude and discipline today. I think that the projects coming to market today are better structured and are actually going to be better managed going forward. I see people now fully understanding that it really does take expertise, knowledge, experience to do these things properly. And so when people are now coming to the market, I'm seeing better prepared projects and so on and so forth. We still have a bit of a way to get the pension funds fully comfortable. They want certain types of credit enhancements on debt and probably on equity. And I think those are things we all have to look at to give them the comfort. But just forcing them into it, I don't think is the right way. I think everybody has to be brought along because at the end of the day, an investor isn't a good investor if he isn't comfortable.
Exactly. The Nigerian capital market continues to show promise, but it's just about 20% of the size of the South African capital market. How do we catch up? Those were part of the discussions that were at the Nigerian Debt Capital Market workshop held by the FMDQ OTC. We've been here for 2 days and it's been robust discussions on how to move the Nigerian capital market forward. I think one thing we can take away from today's event is that there is still room for growth. That's the much we can take on today's edition of Business Nigeria. You can follow us on Twitter at BTVA Newsroom. You can also continue the conversations by hashtagging Business Nigeria. Follow me on Twitter. My Twitter handle is @Tunji Andrews. Till next time, stay safe.